Good morning. My name is Yves Cortellini. I'm head of Wealth Management Investment Service for UBP in Geneva. I want to welcome you to this weekly UBP market update. So markets were reacting to the news flow around the potential stimulus package in the US last week. First, positively, when Speaker Pelosi and Steven Mnuchin, Treasury Secretary, were starting to talk, but then negatively after Mr. Trump tweeted that negotiation will stop until after the elections. He came back on this first declaration a little bit later, saying that he will support targeted assistance for airline and small businesses. Finally, on Friday, there has been a report issued by the White House mentioning that it was increasing its offer for a broad stimulus plan from $1.6 trillion to $1.8 trillion, which is still short of the $2.2 trillion previously agreed by the Democrats, but it's still a positive news, and it shows the market need for stimulus. The need for support was also reiterated by Mr. Powell, the Fed chairman, last week, and will probably be reinforced by the Fed vice chairman, Clarida, tomorrow in one of his speeches. If we pivot to macro number, the recovery is still led by the manufacturing sector and would now need the support of the service sector to be sustained. China and US service PMI continued to strengthen. Unfortunately, in Europe, the service PMI declined into contraction territory in September due to the tighter COVID restrictions. Europe also needs support, but the negotiation regarding the recovery plan that was previously accepted are taking a lot of time and will not succeed before the end of the year, or not even before the end of January, which is not good news for Europe. On the COVID front, the trend in the pandemic is still worrisome, especially in Europe, where new restrictive measures were taken. Total number of cases is now close to 38 million globally. Markets are nevertheless reacting positively as the mortality rate is decreasing and the hope for antibody therapies is rising after President Trump's rapid recovery last week. In the race for US presidency, Mr. Biden is clearly leading, and the vice president debate last week did nothing to change that. Also positive for market because it suggests that Democrats could control the House and the Senate in the US, which would lead to less uncertainty in the decisions making, and markets do not like uncertainty. So when we look at market performance on the table, you can see that it was positive across the board, with the S&P up 3.8%. Nasdaq was overperforming at 4.6% on the week. Eurostock, Nikkei, emerging markets were up during the week. So were yields, 10-year yields, as you can see, in the US, on hope of a fiscal package and more stimulus from Mr. Biden if he gets elected. After a phase of rebounds, the US dollar was weak again against all currency, which helped gold to perform quite well on the week. Oil was up, and the energy equity sector was up 5%, as OPEC General Secretary claimed that the worst is over for producers. I'm going to stop there, but let me just mention that you have the possibility to sign up to receive more regular information from us, and do not hesitate to get in touch with your relationship manager in case of questions. Thank you very much and have a good day.